Welcome back to Alpha Recap. It's Juniper here. Thanks for joining us after the close. We'll walk through today's market action, what moved stocks, and what to watch next. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from today. A fairly narrow, modest risk-on move led by big cap tech and pockets of industrial strength, while small caps lagged behind.
Let's hit the headlines first. Markets closed up. The S&P 500 finished up about 0.5%. The tech-heavy Nasdaq 100 finished up just under 0.5%, and the small cap index finished down about 0.3%. In plain terms, big tech helped lift the tape, but smaller, cyclical names did not participate. Josh, how would you frame that day?
That's the right shorthand. It was a consolidation day rather than a breakout. We saw concentrated leadership from large cap growth, especially AI-exposed names, while investors rotated selectively into industrials and materials tied to onshoring and infrastructure themes. Breadth was limited, so the gains felt top-heavy.
When you say breadth was limited, can you explain that in simple terms for listeners who aren't deep into market internals?
Sure. Think of breadth as how many individual stocks join the rally. If a few giant companies go up a lot, they can lift headline indexes even if most stocks are flat or down. Today, a handful of big tech names were the engines. Until more mid and small cap stocks start to rise with them, the rally isn't as durable.
That makes sense. Let's dig into the drivers. What was pushing money into tech and into industrials and materials at the same time?
There were several overlapping narratives. On the tech side, AI positioning remained central. Chip suppliers and cloud vendors were upbeat, and those big names continued to attract flows. On the industrials and materials side, headlines around onshoring, big industrial orders, and some mining deals created a rotation towards cyclical names that stand to benefit from reshoring and infrastructure spending.
So we saw a kind of split personality, secular AI winners and some cyclical beneficiaries. Anything else that stood out sector-wise?
Yes, renewables and certain utilities got a lift from a string of project wins and long-term contracts. Even though weather-related outages hurt some regional utility names, energy was mixed. Short-term supply concerns bumped some exploration and production names, while midstream companies that earn fee-based revenue were steadier. Financials were quiet to mixed, with regional banks underperforming money center banks on ongoing deposit and loan growth chatter.
You mentioned renewables and long-term contracts. Can you explain why those contract wins matter from an investor's perspective?
Long-term contracts provide predictable cash flow. For utilities or renewable developers, securing multi-year power purchase agreements means future revenue visibility, which reduces project risk and can make those stocks more attractive to income-focused investors. That's why those headlines moved parts of the sector.
Let's talk about small caps. The small cap index finished down about 0.3%. What drove that underperformance?
Investors showed a defensive tilt. When leadership is concentrated in liquid megacaps, money often flows to perceived safety and deep liquidity, the biggest names, leaving smaller, more cyclical companies out of favor. Also, small caps are more sensitive to macro shifts and speculative news, so in a mixed macro environment, they tended to lag.
Speaking of macro, the Fed and economic data loomed over the day. How were traders balancing disinflation trends against a still tight labor market?
Traders were weighing two competing realities. Inflation has cooled from multi-year highs, which is disinflation, but the labor market kept showing resilience, strong employment, and tight services activity. That combination keeps the Federal Reserve data dependent. The market largely treated the Fed as neutral for now, not ready to cut imminently, but not aggressively tightening either. Any stronger wage or price readings could push the market to price a higher for longer stance.
When you say data dependent and higher for longer, how should investors interpret that in their portfolios?
Data dependent means the Fed's next moves hinge on incoming economic reports. Higher for longer means interest rates may stay elevated if inflation or wage growth reaccelerates. For investors, that argues for being selective, favor quality, cash-generating companies that can handle higher rates, while keeping an eye on cyclicals only if economic prints confirm a durable recovery.
Let's zoom into a few names that were in the headlines today. NVIDIA was again a leader. How central was it to the tape?
NVIDIA continued to dominate the AI narrative and was among the session's leaders. Gains in that name and in other chip stocks helped lift headline indices because of their large market footprints. When a leader that big moves, it can have outsized effects on the overall market.
Tesla stayed volatile and was discussed in the context of the so-called Magnificent Seven debate. Is Tesla a defensive growth leader or more of an idiosyncratic story? What did you make of that conversation?
Tesla's a tricky one. Investors are debating whether it fits the new defensive growth mold, which is generally steady, secular winners like the big AI names, or whether Tesla's moves are driven by company-specific news and volatility. That uncertainty kept its stock personality split, so it didn't consistently behave like the other big cap tech leaders.
We also saw IBM underperform after an analyst reiterated an underperform rating, and PepsiCo traded quietly after a hold reiteration. How do those moves fit the broader tape?
Those are great examples of idiosyncratic drivers. IBM's slump showed that legacy tech still faces scrutiny, while PepsiCo's muted reaction reflected steady consumer fundamentals. Analyst notes, filings and event-specific headlines drove local volatility but didn't alter the broader market trend, which remained dominated by the big-cap growth and cyclical rotation narratives.
Technically, you said the advance was narrow. What should traders watch on that front?
From a technical and breadth perspective, watch whether more individual stocks start joining the rally. A decisive move above recent highs with broad participation would be a confirmation that the rally is extending. Conversely, if profit-taking hits the big names and the breadth doesn't improve, that could trigger a larger pullback. Risk management-wise, look for widening participation or be prepared for choppy trade concentrated in high volatility names.
Looking ahead to the next session, what are the key catalysts listeners should have on their radar?
Keep an eye on early week economic prints, consumer spending, inflation gauges, and employment metrics. Any shift in wage growth or core inflation could move market expectations for the Fed. Fed commentary from regional presidents and FOMC members will be scanned for tone changes. Also monitor earnings and corporate updates in industrials and materials to validate the onshoring thesis, plus renewables project news and M&A activity in materials and mining. Finally, expect continued idiosyncratic volatility from analyst notes and regulatory filings.
Before we wrap, give our listeners 3 clear takeaways from today's action.
Absolutely. 1. The market's advance was constructive but narrow. Big cap tech led and breadth lagged. 2. Rotation into industrials and materials reflected optimism on onshoring and infrastructure, but small caps didn't participate, so confirmation is needed before calling a broad cyclical recovery. 3. The macro backdrop remains the key. Disinflation versus a resilient labor market keeps the Fed data dependent, and incoming prints or Fed speak will likely dictate near-term direction.
Great summary. Thanks, Josh. That's a good place to pause. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next close.